My question is for the pairs when it's reset. I have a little bit of problem with knowing how a pair is reset. How do I actually know that when a pair has reset to go up or to go down?
Great question. All right, so for resets, let's just draw it out. What's the purpose of a reset? Let's start there. What's the purpose of a reset? Who knows what the purpose of a reset is? Rock Jr. to continue with trend. Yes, correct. So we have a cycle, right? Like this, right? That's a full cycle. Okay. Now, what if I'm a market maker and let's say price is trading up here at 76,500, right? Prices like this. Okay. And let's say I want to get to 68,500. All right. Now let's say that from here to here, let's say that to make that move, okay, just to make it easy to understand, in order to make that move, that means price would have to move, let's say 1,000 pips. All right. So if from here to here takes 1,000 pips, and let's say Euro AUD moves at 100 pips per day, okay, what's the average cycle of Euro AUD if the average ADR is 100 pips a day? Ashley, yes, 300, right? So the average cycle of this pair, if it moves 100 pips a day, is 300, right? So from here to here, you would expect it to be somewhere in the range of 300, with a possibility, if it extends out to 4.5 times ADR, it'll be somewhere around 450 pips or so. Okay, just to keep the math simple. Now, if you're moving from here to here and it's 1,000 pips and you can only move about 300 pips at a time, what does that mean? How do you get down 1,000 pips? You reset, exactly. So what that means is that you'll have then at that particular time to get down, into that area of 1,000 pips, you're going to have to make, right, the cycle here 300 pips, right? And then when you're coming back, let's say this is peak formation low, you're going back up, you're expecting, right, this to go back up. Well, guess what? Because the ultimate move is to go 1,000 pips low, well, this is what creates a reset, and you see this, and you get another cycle, right? Now this cycle is another 300 pips, right? So in order to get to 1,000, guess what? It's going to have to reset again and keep going another 300 pips, right? This last cycle, maybe it does 450 to get to that 1,000. But the premise of how you confirm a reset is once this breaks this previous peak formation low, that's a reset. That's how you can confirm that a reset's actually happened. Okay. Now, are there things that can help you? I don't want to say predict, but like see if there's a possibility of a reset happening. There is. If you see that the peak formation that's created here, if you look to the left, and there is like nothing there, there's no structure to the left, right? So that it's not creating this peak formation where there's previous, structure here. There's nothing here. Then it's very likely that this is going to possibly lead to a reset because there's nothing here really to hold it. The only reason for this to be created is because they can't go down for 1,000 pips straight. So they create a peak formation so they can get more interest and pick up more orders. The orders very likely that they pick up are going to be from this last lower high. And that's why you see price action go up to a lower high, and then you see spikes, 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 spikes. So do you understand it now? Or do you need a different explanation or something? Resets are going to happen. Nobody knows when the reset is going to happen, though, because we don't know the numbers that they need to get to, right? We don't know that they need to get the ultimate numbers down here from all the way up here.
So can a reset happen more than once on a pair before it make like the 3 levels of drop or rise, 3 levels of rise?
Can it make multiple resets? Is that what you're asking?
Yeah.
It can make multiple resets. Yeah, you could have, let's say you could have, this cycle, reset, cycle, reset, right? Cycle, reset. You can have as many resets as they want. All the resets does is allows them to go back, grab more orders so they can keep the move going. That's it. So when you see some of the pairs like was pound, some of these pairs you'll see multiple resets, right? Reset, reset, reset. Do you get what I'm saying? So let's say like the goal for this one here was to go from 149 to basically 172, 500. They can't do it all in one swing. They have to split it up. Another thing to notice about resets is, just look at the most recent price actions that we have going here, right? Is you're coming off a peak formation high, and then you're expecting sells, but you end up getting buys, So if you're coming off a brand new peak formation high, right? We want to look for sells, but you keep on getting buys. You're like, why the hell am I getting buys? Right. And obviously, so you see price come back up again, and that's like the first alarm bell that should go off, or a red flag that should go off of having a possibility of a reset. If you look at some of the ones that we're waiting for, that are like this, right? That are peak formation highs, and all of a sudden, let me go to like a 2 thing. Let's go to like a 15-minute chart. So if we're coming off peak formation high here, this was, what was this? Right here, right? This is a peak formation high. And then we're looking for sells all the way down here, down, down. And then all of a sudden, we end up getting this during Asian session. Boom, this huge move. You see that? Let me go back to replay here so you can see it. Here's the Asian session. Boom, you get a big move. And then you see it go up. You're like, okay, well, why is it going up? You're not getting any kind of any kind of sell setups. That should be a red flag. You can Robert, you can try to anticipate a reset, but just because you try to anticipate a reset doesn't mean that you're going to be right. I've been plenty wrong on resets, but I think what helps me is the fact that I've just been doing it longer. Honestly, that's it. I've just seen more resets than all of you. That's the only reason, and I still, just I've seen more and I still sometimes get it wrong. And that's okay. That's why I tell you to wait for it to do the reset or wait for it to do the failed reset. Because if you don't wait for it and you just anticipate and guess on it to actually make a trade, you're putting yourself at a 50-50 proposition and you're just gambling at that point. When you can easily go to another pair that's not doing this behavior and trading that pair instead, that could have a potential setup that's going away from the directional bias. It's like this one right here. This is very likely going to be a reset based on how it's looking. Based on, if we look at the daily here, look at the 3-hour time frame wanting to break higher. Depending on how this candle closes here, would give you a big clue because this is a daily candle. So for me, I would just rather wait. There's 28 other pairs that I could look at. So to me, it's just an unnecessary risk. And so that's why it's important, if you limit yourself, or if you just trade or look at, let's say 5 pairs, 3 pairs, whatever, make sure that there is some diversity in your pair selection, right? So like, don't just trade like all USD pairs or like EU, GU, AU, NU, you know what I'm saying? Because you might find yourself in a situation where, some of these pairs might be doing resets or failed resets, and very likely that the other pairs are looking very similar, So it's important for you to have a diverse selection of pairs. Very important, though, that the diversion of pairs that you have to trade are actually pairs that you like. You don't want to trade pairs or try to trade pairs that you don't like, or that you find yourself having a hard time following, because now you're just putting yourself in a deeper end of the pool, and you're not going to have any kind of confidence at all trading those kind of pairs. So try to think of pairs that are different from each other, but pairs also that you enjoy trading. And really, the only way that you're probably going to get to see and find those pairs is honestly just trying out different pairs to see how they behave. And I think a good exercise maybe for you to do is, if you go to a brand new chart, or, go to pairs that you've never traded before, and see, are you able to break down the pairs like this? Are you able to break down the pairs? The easier that you can break down pairs like this, meaning the faster that you do it, the more comfortable that you should feel with that pair, because you can predict or feel how that pair moves. But if you find it very difficult to, break down pairs like this, like finding resets, peak formations, and stuff like that, then it's probably not a pair that you're going to want to trade. Because if you have problems identifying resets, peak formations, and mapping out the chart, then you're probably going to have that much, problems in trying to find the setup, because your mapping of the pair is not going to be correct, if that makes sense. So what are the questions? I use the 3-hour because I can fit more of the chart on the screen. That's why.
So speaking of discipline, because you're doing it for so many years, I would say, so long, what are some of the ways that you would encourage us, like, to be more disciplined, so that we could be like better trader?
I mean, I think for myself, um, being disciplined required me to not think of this as a hobby, but as a business. And so what I mean by that is like when I first started, right, it was fun and it was more of a hobby because I didn't really know anything about it. But once I started to really take it seriously and treat it like a business, then things started to change because my mindset wasn't treating it as, oh, it's not a big deal. To me, it was a big deal because it was a way for me to not have a regular job and, and not have somebody telling me what to do. That's something that I really hated at a job, somebody controlling my time. So it wasn't about making money because I was already making money at my job, really good money at my job. So it was more about getting my time back with it. But for me, treating it as a business rather than a hobby. So I would, every time that I took a trade, I thought of it as, am I making a good business decision? Not just putting on a trade just because to put on a trade. Um, Also, a simple one really that I found myself like not following at first is freaking following my plan that I had written down for the setups. Like I found myself a lot of times at the very beginning, like I had a plan written and everything. And like as soon as the live markets, went live and stuff, and whenever I was trading live money, like it seemed like everything about that plan went out the window. And I wasn't disciplined at all trying to follow the plan that I had created, that I had spent literally hours, weeks creating and back testing and stuff. And so I'm like, well, what am I really doing at that point? Why did I, take the time to create a plan for each setup, to do back testing, for multiple years? For what if I'm not going to follow it? And so it just led me down to the psychology of how I felt when I was trading a live account. And so the emotions that I got from it were overcoming, were way stronger than my discipline was to follow the plan. So if you could create a plan that, first of all, that you've back tested and that gives the results as long as you follow it, then I found that my trading became very black and white. And it was very simply of the setup is either there and all of my requirements are there, or it's not. And if it was there, I would take the trade. And if it wasn't there, I wouldn't take the trade. And I couldn't be mad if I didn't take the trade because my requirements were there and the trade still went in my direction. Right. Because the problem that would happen to me was that I would have a fear of missing out if I didn't take the trade, even if it didn't meet my requirements. I was like, well, what if I didn't take the trade and then it ends up going in my direction anyways? Right. So the discipline of me just following the plan to a T that I've put together for myself and knowing that all I have to do is literally just follow the plan no matter what. Yes, I'm going to have losses I'm going to have setups that look perfect, that have all of my confirmations, and they'll still end up being losses. But I know because I've back tested it, I know that overall, if I continue to follow the plan, it'll get me X amount percentage. of wins. And so as long as I did that, trading became very black and white, and honestly, it became very boring because I was just looking for what's on the list. And if it is on the list, great. If it's not on the list, great. So if you haven't done that yet, that's what I would tell you to do. But a lot of it, honestly, is going to be risk management and trading psychology. The two things that most people, most retail traders in general, don't like to read about, don't like to watch videos about, or anything like that. That's why I give you guys like so many different trading psychology videos in that section of trading psychology. I don't know how many hours there is. There's probably, I don't know, like 20 hours of just trading psychology. So just keep it simple. If you haven't created a plan for a specific setup, do that. Take the plan and then now backtest it and see how successful that plan is over, let's say 100 trades. Take 100 trades during, backtesting with that plan. Is it a winning, do you win? Do you have, 50%, 60, 75%, whatever the percentages of wins? Can you make money with it? There's no reason for you to trade live money if you don't have a plan, let alone if you don't have a plan that gives you a winning percentage. But just be self-aware of what you like, because what I like may not be something that you like. So you have to find your own personality. It's not like a cookie cutter, Some people are great at identifying type 2 setups. Other people suck at type 2 setups. Some people are great at type 3s. Other people are not so good. Other people are great at type 1. So this thing is so, you can make it your own, You can really make it your own. It's just being self-aware of what really works for you specifically. I know for me that I love and I enjoy taking more type 3 trades or more continuation trades than any other setup. And I'm okay with that. I'm okay with missing the other setups because I just feel the most comfortable with those two specific ones. And so that's what I take. The biggest thing that you could have as pressure is if you're trying to trade and you're trying to trade now to make money because you don't have a job. And you have that pressure of like, okay, I need to trade because I need to make money to pay rent or car bill or whatever, right? If you're new to this and you have no kind of that kind of experience and you don't have a job and you're trying to do this, it's going to be very difficult for you because the psychology is going to be so hard for you to get over. That's why I tell people that don't have a job that are starting to get into trading is go get a job first, because as long as you have a job, you can have income coming in to pay your bills while you're studying and learning something. It's a process. Think of it like going to college. You don't get a degree in 2 months or 3 months. It's a process. So the lot size itself works the same, Ashley. It's just the value of each pip is much higher, So you just essentially you make more money trading gold because the value of each pip is much higher. With that, gold, because of the volatility of gold and the higher value per pip, means that you're going to be taking on more risk. So yeah, you could make more money faster, but you could also lose it faster as well. So the lot sizes, they work the same on gold. It's just the actual pip value of gold is much higher than any of the other pairs. So because of the pip value, you typically need to have more capital to trade gold. But the lot size themselves are exactly the same. It's just the value. So like Euro USD is probably one of the lowest pip value pairs you can trade. Why do you think the spread is always so low on Euro USD? You know, compare it to, like, let's say pound NZD that has a much higher pip value than Euro USD. So if you trade pound NZD, you're going to be making more money per pip on that pair than you would EU. Generally speaking, the pairs, that end in NZD, AUD, have a higher pip value than most of the other pairs, besides obviously gold. But yeah, it's just the pip value is higher. That's all it is.